I'm Tim Humphries, head of the Global Essential Infrastructure Strategy. I've been managing this strategy for the past 7 years, and I bring over 27 years of investing experience across both London and Sydney. The first quarter of 2025 was filled with volatility. US markets had a rough start to the year, posting their worst quarterly performance since the third quarter of 2022. Much of this was driven by President Trump's aggressive trade policies, which raised inflation concerns and heightened recession fears. Globally, the performance was more mixed. International equities outperformed US stocks, bonds rallied as yields fell, and gold surged 20% to a record high as investors sought safe haven assets amid rising uncertainty. Meanwhile, the Federal Reserve paused its rate-cutting cycle, adding another layer of caution to the market outlook. In the midst of this turbulence, essential infrastructure performed well. Most importantly, our essential infrastructure portfolio outperformed global equities by nearly 7% during the quarter. And this reinforces why we continue to advocate for essential infrastructure in portfolios. It offers stable cash flows, inflation protection, and acts as a resilient anchor during volatile market periods. As of 31st of March 2025, the portfolio has just over 65% of it invested in North America, with the remaining 28% in Europe and the UK. And we also have 7% allocated to the Asia-Pacific region, including Australia and New Zealand. As of the 31st of March 2025, the portfolio's sector allocation is as follows: 52% in utilities, reflecting our focus on stable cash-generating assets, 23% in transportation infrastructure, 18% in energy infrastructure, and 6% in communications infrastructure. The remaining 1% is cash, which allows us a bit of flexibility and ability to capitalize on opportunities as they arise. Some of our top holdings include TXM Energy, Exelon, and Italgas. These companies align perfectly with our focus on essential infrastructure, providing stability, inflation protection, and also growth potential. Italgas and Elia Group were standout performers in the quarter. Both companies completed significant strategic moves. These strategic deals have positioned both companies for strong long-term growth, and their performance during the quarter reflected that. On the downside, Edison International, which is a Californian utility, underperformed by dropping 25%. The first quarter of 2025 was historically volatile, and amid this, we took a proactive approach to adjust our portfolio. We reduced our North American exposure by 5.8% and increased European exposure, taking advantage of attractive valuations and a growing opportunity set within Europe. We reduced our overweight position to energy infrastructure by selling OneOak entirely and trimming positions in other overweights across the sector. We sold Sempra Energy to zero following a negative regulatory update on their Texas CapEx expansion, which introduced greater uncertainty into the stock. We also sold National Grid in the UK, as its valuation no longer provided the same level of appeal compared to other opportunities. On the buying side, we added Vinci and Eiffage in France, and also Atlas Arteria, increasing our European exposure, capitalizing on solid fundamentals and favorable valuations in a shifting market. As we move forward, the focus will shift to policy tailwinds and more attractive valuations, creating opportunities for those positioned for a rebound. Key opportunities include US LNG exports, which is a vital part of global trade rebalancing, with growing energy demand and new infrastructure projects boosting exporters. The electrification of things and AI-driven demand for low-carbon power provide long-term growth opportunities for regulated utilities. As industries shift to electric power and AI technologies grow, utilities that can provide reliable, low-carbon energy stand to benefit from this structural trend. Despite short-term volatility, infrastructure assets are attractively valued. We continue to be fully invested with a focus on downside protection and positioning for long-term growth opportunities. So thank you for listening. Please visit our website to find out more, and please subscribe to our monthly updates.